You're investing in the jockey, you're not investing in the horse. I mean, I've had plenty of people come through my office where I'm like, wow, that is a really good idea, but it's too bad it's yours because there's no way in hell you're capable of pulling this off, right? I mean, you have to be tenacious, curious, driven, and unhireable.
This episode is presented by our friends at Front Finance.
Hey everyone, I'm here today with the formidable Joanne Wilson, also known as the Gotham Gal. She's a New York City-based angel investor, one of the earliest angel investors to have a female entrepreneur-driven investment thesis. She's also the co-founder of the Women's Entrepreneur Festival, and today we dive into her over decade-long career as a trend spotter and successful angel investor. Her very first angel investment in 2007 in New York media company Curbed, all the way through today, now with an investment portfolio that includes over 130 companies. And everything from food to consumer goods to software to cannabis and now real estate. We discuss why it's so important to create an investment thesis, especially today as a new investor, how to go about creating your specific investment thesis to guide your investing journey, why having a female and minority-driven investment thesis is an advantage in selecting companies to invest in, how to think about creating a successful portfolio, everything from expected returns to finding home runs to cultivating the traits of a good long-term investor. And at the end of the episode, we'll have our exclusive members-only deep dive into the one industry Joanne Wilson is most bullish on for the upcoming year. And you'll learn how you can get in on this investing rising industry before everyone else. Joanne, welcome to the show.
Thanks for having me.
Well, you have a long track record of investing in successful startups with a strategy centered around identifying female-led companies. So you have this female entrepreneur investment thesis. Tell us what it is and why it
why, right? Is, at the beginning of sort of like when Web 1.0 like went home, right? And then I was watching, the second wave of the web, and I was hearing from all these women that were reading my blog, and none of them were getting funded. And they were extremely frustrated with all of these men around the table. And I mean, I actually invested in one woman who we had breakfast. She wanted some advice. And like literally as she's getting in the cab, she's like, do you know that there's no women around my table? And so I really made this commitment because I understood these women's businesses, and I knew that there was only going to be more. And I liked what they were doing. There was voids in the market, and technology was giving the ability to grow at a fast pace and create something that actually had stickiness.
Awesome. So I know that your background, let's just start even from the beginning, that you had an event in your childhood when your parents divorced, and then that really formed your relationship with money, which can you tell us a little bit about that and just your personality and how that translates into the investing you do today?
Yeah, I mean, my parents had a terrible, nasty divorce, and we had money and then we had no money. And I think that internalized, and probably conversations with myself, which is like, I never want to be in this position again. It really was, created severe damage on me and my siblings. And I think we all have a really complicated relationship to money. And because of what was going on there, I just sort of picked myself up. And by the time I had a car, I was 16 years old, convinced my father to buy me this wreck of a car. And I had 3 jobs in high school, and even when I graduated college and I had jobs all through college, like I was just plowing ahead and on the way to the top. And so money is hard. I think everyone has weird relationships with money.
This episode is presented by our friends at Front Finance. Are you looking for ways to boost your investing strategy? Check out Front. It's a free app that helps you make better investment decisions with their proprietary Fisco technology. It analyzes companies and stock data 24/7 and rates stocks with a single score, like a credit score for stocks. Connect your existing broker to get a complete portfolio analysis and daily personalized stock picks based on your preferences and existing investments. It's time to start investing with data, not your gut. Download Front for free at refer.front.org/Lisa.
So then what is it that you wanted to be when you grew up, and how did you eventually end up becoming a professional angel investor?
Well, when I, started out, I was a retail finance major, and, I ended up at Macy's in my first job, which at that point, that's where you wanted to be if you were going to be in retail. And it was an incredible experience because it was a pyramid. Everyone came in at the bottom. You got promoted the second year, then you got promoted the third year, then you got promoted the fourth year. And the fourth year, when you became a buyer, you kind of hung out there for a period of time. And to be honest with you, I knew nothing about politics and how long it takes to be the president of the company. When I started, I figured, within, 8 years, I'd be like running one of these large multi-million-dollar companies. I literally had no idea how large companies work, how politics worked. And then, I found myself at Macy's at a point of time where Campo came into the markets, and Macy's went private. The amount of debt that they took on was insane, and everything was being micromanaged from above. And I knew enough to be dangerous to say, like, I'm not doing this unless I get participation in some kind of stock here. And I, walked out the door. And the funny thing about quitting is once you quit once, you can just keep quitting, and you can keep finding new things. And so, my journey to, run the world sort of took many zigs and zags. And, what I thought I was going to be ended up not what I ended up being.
So then what is it that got you excited about investing early on?
Well, I was involved in the tech world from the mid 90s when the internet, just started to come onto the scene and businesses were being built. And I had been home after leaving the garment center with 2 kids, eventually 3. And I was losing my shit. I really was like, I can't do this anymore. I love being home with my children. I'm really glad that I had this time to sort of be a full-time mother. But for me personally, I remember literally going to this play date with a bunch of women and my kids and listening to these women talk. And all of a sudden, all I could hear was like, wah, wah, and I was like, oh my God. And I went home and I said to my husband that night, I was like, you know what, this has been great. But honestly, if I had a gun in my bag that day, I probably would have killed all of them and killed myself. It's like, I need to go back to work. And so, he was very involved in investing in these new technologies and these new businesses that were using the internet as their platform. And so he said, you should go talk to Jason Calacanis. He just started this magazine. You know how to make money, you know how to build businesses. And so I went to talk to Jason, and, I sort of joined him as the number 2, although I was purely freelance. And then sort of dove into the whole, community of technology.
Got it. And so from there, you made your very first angel investment in a company called Curbed.
Correct. And that was in 2007. So after I was involved with Silicon Valley Reporter, the entire business in the internet literally collapsed around the mortgage industry, and everyone went home. And then, there was like, things were starting to happen again. And you could see that this generation of tech was so much different because, it wasn't the first generation that was like, oh my God, there's an opportunity here. The second generation was like, yeah, I grew up with a computer. I see exactly how I'm going to use it in my life, compared to, yes, there's an opportunity, but they were filling holes in their lives. And so I was reading Curb Media and Eater and Racked multiple times a day. And I said to my husband, it's really too bad you would not invest in this, because I know that media is not your thesis, but I will tell you that, this is how we're going to start taking in content. And this is really smart, because it's not only B to C, it's B to B. And he came home the next day and he said, Lockhart is looking to get money. And I called Locke, and that was the beginnings of investing.
So that's really interesting, because even then you were looking at media as having these multiple streams of revenue. And a lot of investors today are really scared to invest in media. So what do you see as the future of media? And are there media companies that you're continuing to look at investing in?
I haven't done any real hardcore investing like I did back a couple of years ago, where I was doing 12, to 14 companies a year. But I still think there's great opportunity in media. I mean, will it all be ad-based? Not necessarily. There was a time when subscriptions never worked, but I think we're returning to a time where they do work. So, if you put out a great newsletter and people love what you're doing and you're willing to pay whatever it is to get it every day, I think more people are open to that now. I mean, we cannot get rid of content and journalism. I mean, I pay for the New York Times, I pay for the Boston Globe, I pay for the LA Times, and I want to support these organizations. And so I do think there will be a next generation of media. But like I said, we spend all day on our phones. We're all taking in media and conversations all the time. So what the business model will be is always up for conversation, but it doesn't mean that there won't be media.
Mm-hmm. And so what you did very clearly was you were like new inside and out, and you felt that stickiness of the product. But then how did you go from that first investment into selecting your second, and then your fifth, and then your 10th?
When people are starting to invest, all of a sudden it's amazing how many people show up in your box. And I saw sort of the future of how people were going to be more interested in food and more interested in branding and having their own personal brand that is going to be down to the point where you open your refrigerator, and inside your refrigerator, it represents who you are. And so I just started seeing all these businesses. And as a generalist and someone who just reads ridiculous amount of information, which I would always call cocktail fodder, as I was talking to people and entrepreneurs about their ideas and what they were building, it was clear to me that technology was going to change every single vertical. And that is how I started. I put a lot of money into Curbed. Thank God it was a win. And then after that, I was like, wow, if I'm really going to do this, I need to have a thesis. And so, and then I got really serious about, well, this is what I'm going to spend all my day, what I'm going to be doing every day.
So a lot of our listeners are early investors, or they're just starting their investing career, and they're trying to figure out how do they shape their investment thesis. So walk us through your process after you made those first few investments and said, okay, I need to get serious about my thesis. Where do I start? And what are the holes that I specifically want to patch?
Right. Well, first of all, a thesis is extremely important. I think that you're going to see more venture capitalists invest with theses versus this generalist concept. I think that being a generalist really worked well when I did it, and also super early to the game. But now, technology has touched everything. And so you really need to understand particular verticals so that when someone does walk in your office and you are an expert in the education sector, you'll know, oh, wait a second, there's 19 people doing this and no one succeeded yet. Or, I have not thought about this angle and I really haven't seen this before. And so I would say if I started today, I would pick industries that I'm passionate about and I understand, and I would, stick to those areas. I wouldn't be so much like this, which is what my portfolio looks like. Even though, 80% of those, I was probably the first penny in those businesses. And so they are all the same at that level. It's only as they get larger and more into their particular industry do things really begin to change, right? At the beginning, it's the same problems. We need capital, we need growth, we need to hire the right people, we need to have a work org chart. I mean, those are everyone's problems at the beginning. It's later on where the problems are much more connected to the industry that you're in.
And how do you support people, the founders, throughout that cycle of the life cycle of their business, with early on and then through the later stages?
I mean, I have said very early on, when I give someone money, that I expect them on my calendar once a month, and we're going to put it on now. And I'm always available to you, even if it's not that month. And when we have that conversation once a month, I want them to prepare for it like a board meeting, because many are singular founders. And so there's someone they can talk to. There's a consigliere, which is what I've considered myself to all of these founders, and helping them walk through things, or helping them walk through a problem when it happens, or helping them think who they're going to get money from on the next round, and do they need a lead, and how's that going to happen, and all of those things that everyone struggles with. It's really nice to know you can call someone, particularly as your business gets more mature, someone that is not necessarily a venture capitalist that has 10% ownership in the business, who can really walk you through how to get things done and what makes sense. And so that's really what I think I've done for most of the founders I've invested in.
Got it. So you now, clearly having invested in so many different industries, have a lot of expertise and just know where holes are in different industries. But going back to your thesis, where some point you said, I want to focus on women, I want to focus on minorities. Does that sort of thesis still hold up today? And would you recommend someone use that lens as well?
I think I mean, for me, for sure. I mean, I have been a champion of women for, since I began, particularly the Women's Entrepreneur Festival, being very vocal about women at the table, and also very vocal about diversity in regards of Blacks and Latinos that are not getting funded. So yeah, I have been extremely vocal about it, and I've put my money where my mouth is. So I'm very proud of that. But again, it's like anything, like a company that says, well, we're only getting resumes from men, for this job. And it's just like, just don't look at men for this job. And then guess what? You'll find a female for this job. And so, if that's your thesis, that's what you're going to do, then stick to your thesis. I mean, I am a huge fan of a financial thesis, as well as a vertical thesis, as well as anything thesis, because you never know, right? It mitigates risk if you're consistent among every single thought process.
Well, I mean, as someone who has worked in the space of, bridging the funding gap for female entrepreneurs, I'm a big champion of the work that you do. But one thing that I want to get across really clearly, and you've said this as well, is that it's not a philanthropic thing. It's a practical, financial driven opportunity. So tell us about some data that perhaps people might not necessarily be aware of.
Yeah. I mean, listen, I don't know the actual numbers off my head, but you can certainly read them out there, which is women entrepreneurs, if you look at the numbers, and again, numbers are fungible, tend to do better than men founders. And there's less of us, so the numbers change, but there is not even a question that diversity around the table and women-led businesses happen to do better than male-led businesses, unless there is diversity around the table. I mean, if you had even all Black men around the table, that's not good either, right? There needs to be diversity, as we're a diverse world with diverse businesses, and to understand the diversity of the customer that you are working with, be it software, be it food, or be it a building. And and particularly today, and everything that's gone on over the past year, is that the importance of equity among everyone and diversity at the table. Now more than ever, we need to continue down that path.
Yeah. You as an angel investor you were one of the earliest angel investors in female like consumer companies and just female marketplaces, because you were saying that a lot of men just didn't understand, right? They just weren't investing in that. So that was obviously an advantage back then. Do you think anything's changed since then? We know there's a lot more awareness, but as we know, there's still significant underrepresentation of women in venture capital and investing. So what are the advantages today?
I think it's changed a lot over the past decade. Things don't change in a day, things change over time, right? And then they change and you're like, whoa, that happened overnight, but didn't take overnight. There is many phenomenal women that have been funded over the past decade that have now risen to the top, that I'm hoping that we will see more of their companies going public or more of them having fantastic exits, which will create more diversity for the next generation of women coming up the top, because they can see other women doing it. And as well as says something to investors of like, wow, you invested in those 5 women and all 5 were successful. Like, I obviously am not paying attention. There will always be the boys club, unfortunately. And by the way, it could be the females club, right? And so, let's say there's a company that is doing amazing work, has a Black founder and having a very hard time raising capital. And all of a sudden, some white guy comes in, or white woman, and talks to the VCs they know. And they're like, oh yeah, you've had success before. Here's $5 million. And this one Black founder who's struggling so hard financially, but is really doing well with their product, is like, how the hell did that happen? It's going to always happen. So the importance is keep your head down, ignore the white noise, do what you do well, you'll eventually be rewarded.
Mm-hmm. And obviously it's a very founder-driven business. Beyond like leadership and focus and perseverance, what are the most important factors to look at while evaluating an investment opportunity?
I mean, it's just what you said, right? You're investing in the jockey, you're not investing in the horse. I've had plenty of people come through my office where I'm like, wow, that is a really good idea, but it's too bad it's yours, because there's no way in hell you're capable of pulling this off, right? You have to be tenacious, curious, driven, and unhireable, because you are just an entrepreneur. What's interesting these days is I'm seeing more founders who've gotten to the point in their companies, we're talking C, D, E rounds, like very, that are doing $50 to $100 million, if not more, in revenue. And they're saying, you know what? I really shouldn't be running this company. We're going to bring in someone else to run this company because I got so many ideas going on in my head. I'm ready for the next. And to me, that's a true entrepreneur, right? I built something, I had a great idea, and now I'm going to let the professionals take it to the next level, and I'm going to start something else.
And would you recommend someone get into angel investing? Like, is it a good way to build wealth for your average person?
No, I would not call it a good way to build wealth. What I would say is that if you're, a woman and you're like, I'm sort of in this mode, I have this money, I want to be involved in business. I'm going to take $250,000. I'm going to join one of these groups, or I'm going to do it on my own, and I'm willing to lose every penny, and I'm going to put this much in on this many companies. I'm going to hold this much back for putting more in. And I hope that I can be of help and help the founder do whatever they can. That's interesting versus putting money into a nonprofit, which women tend to do instead. And so can you create wealth? Possibly. It's like the waitress or the waiter that becomes, an Oscar winning Oscar-winning actress or actor. There's just not that many, and there's thousands of them. I mean, I remember when I was, my daughter was young, she said to my brother, I'm going to be a female in the WNBA. And my brother was like, let me explain this to you. This many people play in junior high school, this many in high school, this many in college, this many pro. You're a white Jewish girl that probably won't be taller than 5'8". You're not playing basketball. And she was like, what? But again, the chances of you having an Uber in your portfolio, unless you're sitting in Starbucks in Silicon Valley all the time, it's not that easy.
So then what continues to drive you, as a professional angel investor? Walk us through your portfolio and the percentage that have been successful, that are, that are dead right now, or just what continues to drive you there?
I mean, my returns have been great as a whole. I mean, when I first started doing this, I remember saying to my husband, I'm going to be totally different. Every one of my businesses are going to do well. And he's like, okay, fine. Of course, that did not happen. But I think what really I love is helping people grow, right? So that is to be able to give money to a founder that I think is fantastic, and I love their product, and I love what they're doing, and I love their energy, and they listen, and we can collaborate together, and at least I'm someone at the table. And then all of a sudden you walk in their office 3 years later, and the elevator's open and there's 100 people sitting there. I mean, that's a real thrill, right? That feels really good. I mean, certainly the exits are great, but the growth is much more fun.
So can you walk us through one of your more successful investments, and what's the thought process that led you to invest in them in the first place?
Yeah. I mean, Curb Media is still the gift that keeps on giving. I mean, and which has been great, which is my first investment. I just had a company I can't say because it hasn't been announced, this next round that they're doing. And I knew about it. And so I was like, I want to sell half of my position, because you also have to be good at portfolio management, right? You don't run these things to the very end. A small piece should run to the very end. And so, I sold half of my piece to one of the venture capitalists around the table. That piece is 15 times what I put in. And now the rest is is it zero? And I still have half in, right? So that's amazing. These cannabis businesses are crazy. So, one that I put money in, I thought that their second round was insanely egregious, so I didn't do it. They sold to a company which is the #1 traded company in Canada, and I took out my original money, and now everything is from a zero cost basis, and I'll probably make 20 times my money on that. And so those are great things, right? It's the ones where you put in money and you spend 7 years with the founder, talking to them once a month, if not more, that they end up never making it, which is really as painful for them. It's just as painful for me. I feel pain for them, and that's a hard thing.
I really want to touch on this portfolio management piece, because I think sometimes people don't realize that there's ways to look at it, like, when do I take my money out? What are the considerations? So talk to us a little bit more about that.
Yeah. I mean, when people get into a Series C, a lot of the venture capitalists would like to see a cleaner cap table, which I totally understand, because you don't want all these people on the cap table. And most of the people that are entering into C want to own a particular percentage of the company. So if they can buy some of the original owners of stock out, it gives them what they need, but it also allows you to make your money. So let's say you put $50,000 into a company, and all of a sudden it's worth $70 million, and people are putting money in at a $70 million valuation, and you have the opportunity to sell. You should sell 50% of your position. It's always fun to, run with these companies till the very end, But at the end of the day, it's about portfolio management. It's the same thing for venture capitalists. No one runs these companies to the end with every penny they put in the business. You know, they have to LPs to pay back. I mean, it is about portfolio management, and the best time to sell is when the company's at the high.
Mm. So what's an expected, like a good expected return from an angel investor if they had like a target? Because it is different from institutional and venture capital.
Totally. Listen, 3% return on your money for venture even, right? That's great. That's standard. If you can do more than that, you're rocking it. And if in fact you had an incredible experience, you made an impact on multiple people's lives, and you created jobs, which is something very important to me, and made an impact on the economy, and you did 1.5%, at least you got your money back and some, and you enjoyed yourself. And so I think that's how you should look at it.
To the 3%. So it's lower than stock market.
You know, stock market is all relative. Right now it's like booming, but not always. I mean, I think that a lot of the reason people put money into when they did, you know, in the last decade had to do with where do I park my cash? You know, I don't want to park it all in stocks and bonds or in the stock market or whatever I want to put it in. And so I'm going to take a piece of it and put it into funds that put money into that are venture funds. And that's a great way to put money too. You know, you could do angel investing on the side and then put money into a venture fund that are institutional investors with the hope that they will make 3 to 5 times their money.
Okay. So for the angel investor, you're looking at 3x ideally. And then for institutionals, people can expect 10x more, the ideal.
3x, 3 to 5x. If you get 10x, you got a great venture capital, and there's not a lot of them that do that.
And at what point, if someone's building their portfolio and they are, let's say, 5 years out, and then how do they evaluate their portfolio and say, like, this is a good return, as in maybe 5 out of my 10 have failed, or 7 out of my 10, like what's a good target there in terms of the percentage of companies that are doing well?
Listen, if you look behind the door at many of the venture firms that had a Uber or a Facebook, you might find that that was the only one that saved their ass, because everything else was worthless. Now, I'm not a big fan of that. I think that the best venture capitalists have multiple fantastic exits, and then there's some that are mediocre, and there's some that die, but they do everything in their power to help the ones that are mediocre or die to get them somewhere and get the people somewhere. A lot of venture capitalists just ignore those companies and spend all the time with the companies that seem to be pulling out of the gate. And so it's not about how many succeed. It's really about how much your entire portfolio has in returns.
Got it. And then just in terms of women in investing, currently female investors make up just around 13% of the VC industry, and women, as we know, are still just really receiving a sliver of overall funding. How do we fix this?
You know, there's so many organizations attempting to fix this. I think that one of the ways to fix it is women taking responsibility. So here's a perfect example. You build a company, your company goes public, you've got 3 kids at home, you're like, I'm done. No, you're not done. Take some of that money, put it back into the echo chamber, and invest in women. I'm a number 3 person at a company that just went public. I'm at Slack. I just got sold. I'm one of the top females. I just made $100 million. What are you going to do? I'm going to start a venture fund, because that's what all the men do. That's how we're going to change. And remember, my mother, who, graduated college in the late 50s, she had 3 choices: homemaker, secretary, or teacher. Now, there were some certainly that were, thinking out of the box and weren't doing that, but not a lot. And so we've come farther than you think. And so more women need to think about getting in that industry. And once that starts to happen, then the other people on the other side of the table that they're seeing are people like them.
And you are the queen of reinvention. You talk about that a lot. So what's next for you?
Good question. So, you know that I'm building apartments with my husband in the real estate world, which is great. And we've made a commitment to build carbon neutral buildings, and which we think is really important for the environment. And it's kind of crazy that two developers who've never done this before is building a carbon neutral building in New York, and we can't get related to do that. We hope that others pay attention to what we're doing, and we'll see more of that. And, you know, I'm joining a board that in New York. I mean, I sit on the board of the High Line, but I'm going to be joining the board for the Fund of Public Housing. So I'm really excited about that because I care a lot about the city, and there's a lot of amazing people that came out of NYCHA. And I'm actually thinking about and working on right now opening up a brick and mortar store with a new business model because I have been in the retail space and in the wholesale space and part of my career. And I think that one of the biggest problems in that space as a whole is the business model doesn't work anymore. And so I do believe when we get to the other side of COVID, that people are going to be dying to go into stores and find community and find experiences and touch things and you know, wander in their neighborhood. So I'm working on that right now.
Awesome. And is this through the real estate development through your company, Frame Home?
No, Frame Home is just real estate. These will all go under the Gotham Gal umbrella. So they'll all have Gotham in the names.
And as we know, the importance of good branding and consistent branding.
Very important.
And just any last important takeaways you'd like to leave our audience of aspiring investors with?
You know, I think the hardest thing for people when they've decided, you know, I want to invest is jumping in. And once you've made that decision, give yourself a good 6 months before you make your first investment. You know, do your homework, talk to people. I'd even say give yourself a year. You're always learning. And what happens is you start to meet all these brilliant people because, you know, in general, entrepreneurs who are really successful and are really have these visions are generally extremely smart people. And, you know, you become enamored and you think everyone's a genius. But the truth is, the more time you spend with all of them, again, you develop your own gut in regards to who you think could succeed and who you think is not going to succeed. You know, and you should think about this money is going to Las Vegas, you know, and then think about how much you spend on your Christmas vacation. So, you know, hopefully you'll make an impact in the world and hopefully you'll make your money back.
Awesome. So overall, have a specific investment thesis, focus, trust your gut, use investing as an opportunity to learn new things and also create an impact, add value to places and people and industries that you normally wouldn't be able. As you make more money, reinvest it back into creating the world that you want to see.
Yep. I like that. Yes, exactly.
And then the very last two questions, and this is for our exclusive listeners. What is the one industry you see the most upside in?
Cryptocurrencies. And also climate. We're going to see a lot of change in climate, a lot of industries out of climate. And again, like I said earlier on, I think biotech is really interesting. I think those are three game-changing industries in the next decade.
Are there specific companies you're looking at in those areas?
No, I'm looking at my store.
Awesome. Well, thank you so much for.
Cannabis too. Cannabis is going to happen like this, right? So today something was passed at the UN making cannabis not a bad drug. It's like it was devalued as something that is okay, which came from the UN. And I'm invested in a cannabis company in LA. And I said, I texted and I said, hey, this is going to be like gay marriage, right? For all these years, all that fighting, all that stuff, and then it turns on a dime. And so having them bring that down, we're going to see massive change, I think, in this country sooner than you think. It's going to become normal, and we're going to be able to ship across states because it's going to be legal everywhere. And so I do think there's a lot of opportunity there. Most of it is CPG, which is not an easy thing to invest in because the returns are not high generally. But I do think the cannabis industry is very interesting, and not a lot of people are putting their money into it just because, it isn't legal everywhere.
And I mean, that's where always the opportunity is, where people are still not yet taking it as seriously and you're still an early mover.
Correct. Yeah. So I think that's a really interesting industry. And my gut is that once all of this, there's a watershed moment, we'll see all of the institutional investors jump into that game.
And have you already invested in cannabis companies?
Yeah, for sure. It's a Wild West. I started a couple years ago, maybe five years ago, and I didn't do that. I haven't done as many as I would have thought I would have, just because I think the real is brands. That's where the money is to be. That's where I think the interesting money is. And there's a lot of cowboys. And so I had a really hard time finding people that I thought knew what they were doing.
And when you say brands, do you mean good branding or?
Yeah. Like a great CBD product, or a great, pre-rolled joint, with beautiful packaging. I mean, the one that's done a really great job is, of course, I can't remember the name, white with the black packaging. And it's beautiful. And they have stores in LA, and it's like, and throughout California. And you see it even when you walk into a dispensary because it's such beautiful packaging. And so I think that consumer products is where all the money's going to be, or, almost like not one product, but you make multiple products.
Like having a whole product line and then just dominating all of it.
Yeah. That's what I think. But I think one-off products is really difficult.
Okay. And just so I understand a bit more within the space outside of those consumer products, like what are some of the other potential big areas that you see in cannabis?
There's people, I don't think there's money in flower. I don't think there's money in owning a dispensary, because eventually this stuff is going to be, a liquor store, 7-Eleven. And so, and once it becomes legal, they can put their money in the bank and they don't need to worry about a new kind of transaction. I really think that it's about multiple products, again, under one umbrella. I don't think there's anything else in that industry. I mean, you can think of it like the liquor industry, and that's the best way to look at it. I mean, Diageo.
That's a good way of thinking of it.
Yeah. They own multiple brands, right? They're a tremendous success and massive cash.
Any front runners that you see specifically that in this industry right now, product brands?
No, I mean, the best thing to do is really get on the Canadian markets and see who is the top publicly traded cannabis companies and what they have underneath their umbrella and what they're doing is the best way to start to really educate yourself in that business. But there is a lot of interesting cannabis that's happening in the medical field that I think is of interest too. It's very different. You know, again, that's an area that I don't really know as much about.
Cool. Well, this is really exciting. So I'm excited to see what comes out in 2021. I'm excited to see what you do with your brick and mortar. So thanks again for coming on to The Confident Investor and sharing all your knowledge.
My pleasure. Thanks for asking.